Shawn Hickman from Market Matters is standing by in our Barangaroo studios to get across not only what's happening on the local market here, but also key US earnings that will be out later this week. Shawn, it's great to go and see you there. The one thing I wanted to go and start off with is not only the strength that we're seeing in the local equity market, less than 2% off all-time highs at the moment, but the Aussie dollar as well in unison is ripping higher, now trading above 70 US cents. So what explains this sudden bout of enthusiasm for all things Aussie?
Well, one of the reasons I wanted to just touch on the Aussie today amongst the eclectic group of charts I sent to you this morning was we are seeing some offshore buying come into the Australian market. It's been a while since we've seen that so evidently, and every time we come in the morning, and that we've seen it a few times so far this month, and the day might be off 200 or 300 points and everyone's thinking, oh, we're going to have a bad day after rallying so strongly over the recent months. No, what's happened is overseas buyers have come in, especially around that 11 o'clock time, 12 o'clock time, and the market has actually gone significantly higher. So I think one of the things to take out here is the Aussie dollar is strong. We're seeing people come into the market. They're very keen on our resources. And if they're putting money into Australia, we're a small market. Our resources sector is pretty dominant. There's some resources stocks obviously in Canada, South Africa, the UK, but we've got some really, really good quality resource stocks. If people think we're going to have a resources boom, this is where the money is going to come, and it's supportive of the Australian dollar.
One of the characteristics of this rally that we've seen, though, is it's not been evenly spread out across the mix. You mentioned, of course, the money that's flowing in to the resources space in particular, but not every sector has participated. What do you make about that as a sign from a technical indicator?
I think from a technical perspective, it's absolutely fascinating. I mean, we've been looking at the market and we've been saying we've been net bullish. And I've been on the show for the last maybe 6 months being bullish, and I've had commentators say to me, I'm not hearing a lot of bullish comments, but it's more we're bullish particular stocks and sectors as opposed to the overall market, around this 74.50, 7,500. I'm more of a neutral position, but certain sectors I really, really like up here still. And what we're seeing at the moment, we've seen over the last few months, I think it's 3 months now, we've seen a 30%, or last 6 months, sorry, a 30% rally in the ASX 200 materials index. But the tech stocks haven't moved. So if you look at that chart there I sent through this morning, it's pretty clear. Material stocks, whether it be BHP, Samphire, obviously Oz Minerals taken over, they've ripped higher. The ASX 200 IT index is unchanged over that time frame. And we feel the last few days have been supportive of this, but obviously a few days doesn't make a summer. We think the short-term upside in the local market is now going to be more tech-orientated, growth-orientated, and that baton of outperformance is going to be passed over to the less popular stocks, I guess.
Okay, we've seen some instances where those names that were really beaten down in 2022 have performed quite stunningly in recent days, including some names on the local market today. More broadly, I'd like to get you a picture after the rally we've seen for the index. How does it look? Because we're talking about all-time highs. Again, it's run very quickly, very sharply, and only driven by a select few sectors. Are we getting to the point where everything's being priced in and there's downside risk starting to go and brew?
I think the market's tired. It needs a rest. We're up well over 16% off the October lows. And certain sectors like the resources I've just touched on, maybe the banking stocks, they got a downgrade from Macquarie yesterday. People are starting to come out and say, yes, it's a good quality company, they're making money, they're paying good dividends, but it's all priced in. The trouble is, on the other side of the coin, you've still got investors are sitting on more cash than normal, and that's why they're starting to look for areas that are market that are cheap. It's hard to find areas of the ASX 200 that are cheap when we're trading at 7,500, give or take a cappuccino, but that's what they're doing, and that's why we think we're going to see some catch up in these underperforming stocks and sectors. So obviously the local market is dominated by resources, it's dominated by the banks, and if they are going to have a rest, we could easily see this market pull back 100, 200 points, but overall we still think there are plenty of sectors that are going to do well over the coming weeks and months.
I've got to say, whilst it's been very nice to go and see the local market is kind of disconnected from some of the other movements we're seeing on Wall Street, it never really lasts for too long, which of course brings us to earnings season in the States, now well and truly into the thick of things, and we start having the big tech titans go and release numbers. What are some of the reports that you'll be watching really closely later this week?
Well, we've seen a bit of a lift up over the last few sessions, as you know, with the likes of Microsoft, etc., because the big tech companies are finally focusing on profitability. They're laying a lot of people off. Tens and tens of thousands of people are losing their jobs, although, of course, There's already talk about, it was in the Fin Review today, Bill Gates talking about AI is going to start to replace a lot of those jobs. But I think the risk reward says after the big pullback, shall we say, for example, in Microsoft, if they don't report too badly, these stocks could pop a lot higher, which ties in with what we're saying towards the local tech sector. So from a risk reward perspective, after falling almost 40%, we can see Microsoft rallying if the result isn't too bad. The market is, in other words, it's been downgrading, they've been scared, and now I think people are starting to say, well, if it's not too bad, we probably should get back into this sector.
Shawn, has there been any names that have already reported that really impressed you and look pretty constructive on the charts?
Not really. The big ones that we're looking at most closely are coming out in the next coming days. They're the ones that are going to have the biggest influence on the market from a sentiment perspective. And Microsoft is the first one that's going to come up to the line for that front. But, as I said, I think the biggest thing is looking forward. The market is cashed up when it comes especially to the tech space. They're very nervous about what they've seen. We've all seen the Fed's talking about interest rates going above 5%, but that's old news. And if they only go up to 5% and they stay there, they don't go much higher, then there will be money coming back into these growth stocks if they don't perform too badly. And that's what we're looking at. We're looking at what can happen moving forward. And it's quite boring as risk reward, something I talk about all the time on these shows. And I think that the actual reports that matter are still set to come out going forward.
In the very near term, the risk of maybe a pullback and even maybe an abrupt one at that, given that so much good news seems to be priced in and we've run very hard, is that something that's on the radar as well, a potential just one bad release or one bad inflation print away from maybe a bit of an unwind?
Oh, without doubt. But again, I think from our position at Market Matters, what we're seeing is a situation where the market will go up if it's not too bad. I mean, if it's too bad or we get another bad inflation print and the market gets convinced, okay, the Fed are going to push through 5%, they are going to keep the rates here longer, but I think the market is expecting that. And I come back to what I was saying before, you've got to look at this market on a stock and sector basis, not on an index level. Can I see the ASX 200 as an index pulling back? Absolutely. If the resources are tired, if the banks are tired, I could see it pulling back without a shadow of doubt. But if you're overweight the tech stocks around here, I think you do well. And if we then have a pullback in, say, for example, the gold sector, precious metals, which we particularly like, that would be great. And as I said over the last few weeks, we think the most important part of the fulcrum for this market going forward is probably the US dollar. And the US dollar is due for a bounce. I mean, it's fallen tremendously over the last few months. And any bounce in the US dollar, we'll see a bit of a rotation between the sectors. Hasn't happened yet, but I think it might.